Hello and welcome to CryptoWeeklies. This is the homepage of my website CryptoWeeklies.com, link on the bottom of your screen. Today we discuss some changes that we made to the website. First starting with the narratives that are somewhat again crypto market related, using social media platforms such as YouTube and X. Last 7 days worth of trends. Right now the size of bearish narratives is slightly higher than the bullish narratives, but if you go and try to double click on it and look at it in a holistic picture, the word cloud although says the bearish narratives is stronger than bullish, but the momentum or the normalized score between 1 and 100 for these bullish narratives has started to rise now since the last 24 hours or so. So in the shorter term, the bullish spike is more than the bearish narrative, which is a consistent narrative as one would expect in the bear markets. Over here topping it around the top narrative over here, coming it with a spike to 100% on March 12th, but now it has died down quite a bit compared to that. The bullish narratives are on the ascension or on the ascent. The overall social sentiment risk, which is driven by two factors: the number of views to the popular YouTube channels compared since 2021 January, and which is in this bar shape, and then the comments, which are overall comments on these popular YouTube channels at a monthly level, which are in this red line over here. You can see that this time around again the sharp rise in the comments came in May 2024 around the Bitcoin halving, but the rise in the views was much higher in May 2021, where the average monthly views were at around 62 million. This time around the peak in December 2024 was at around 38 million or so, roughly half of what attention was in 2021 in 2025. Now as of today, that is the last close, we look at last close of the previous month. Although there has been some renewed interest since December 2025, there have been some higher number of views and also comments have surged quite a bit, but again the comments peaked in October 2025. That's when Bitcoin also peaked on its USD pair. Now looking at some of the other constituents of the dashboard, again we looked at the narrative cloud, we looked at the social sentiment, then the last is the composite risk score. This is driven by a lot of things. Again, first and foremost are these higher market cap assets such as Bitcoin, ETH, XRP, BNB, Sol, are they in accumulation zone or not? Most of them are not in an accumulation zone, as the price has now in the second week or third week of March, mid-March that is, has risen to some of the key risk levels again, and has gone out of the 0.3 accumulation zone. That's because of the healthy rally that we have seen. For example, over here price of Bitcoin is now almost at around 74k. You can see it's at the prior that is the 2024 breakout zone. Again, this was the 1 year ROI. You can see the 1 year ROI is essentially neutral at this point in the bear market year, which is quite a bit familiar if you look at January 2021 or even March 2021 over here. The ROI did not touch that level, the yellow line over here in 2022, but compared to 2024, again you could see that this bull market was quite stretched out compared to the last ones. The price stayed bullish, for the price of Bitcoin stayed bullish essentially since October 2023 till, one could argue, October 2025. 2 years of bullishness compared to the last cycle, where the breakout was October 2020 and then the cycle highs were in October 2021 or November 2021. So that kind of has stretched the bull market, but since that drop to essentially this 200-week simple moving average, if we see that over here, this blue line over here, I'll try to color it better slightly next time. If we were to look at this blue line over here, that's the 200-week simple moving average, and then as the price came really close to the 200-week simple moving average in early drop in February 2026, price did eventually meet that support over there, and now the price has rallied to that white line over here. That was the 2024 March high. And as Bitcoin rallied, so did other cryptos such as ETH over here has also rose to almost $2,300 level. And it has been largely a rally driven by the overall sentiment and the counter trend rally, pointing to an area where the most of the narratives, again from cycle to cycle, if you try to tune out the noise, you would find that the rally usually goes and tries to make a presence to this this yellow line over here, which is the prior year's support level for Bitcoin. That would be at around 80k. We are again only $5,000 away from that level, so not too far from where we are right now. That's why the overall composite risk has gone to the extreme, out of the extreme zone and out of the accumulation zone, as well as higher than 0.3, not just for Bitcoin but also for ETH and BNB and Sol. And most of the cryptos are again at end of their accumulation levels. That's because again from the constituents of this model are again the logarithmic regression deviation and time weighted average price deviation. We'll see those two models. The time weighted average price deviation helps identify from this white line, which is the time weighted average price, understood as the gravity of time approach, essentially looking at levels where the price has historically spent very less time. For Bitcoin, it's any time when the price is closer to risk level 3 or risk level 3 and below. That's where the bear market bottoms kind of set in. Right now the risk level is 7, and you can see from month to month over the last month as well, at that drop in February 2026, the difference between the price and the time weighted average price was 129%, still within the same risk level 7. Now the difference has increased to 166%. That's why the deviation between the price and the time weighted average price is higher now, kind of signaling an overvalued or out of the accumulation zone perspective for Bitcoin. And the diminished returns based fair value model says, diminished volatility based model says that the fair value for Bitcoin is 78k, as the price is now closer to the fair value than it was in that February 2026 drop, when the fair value was 78k and the low was at around $60,000, $18,000 difference. If we were to look for other indicators for this similar indicator, looking at in a different fashion, is this color coded with respect to the same fair value. The regression based color codings are pointing out to the risk levels added at that drop was at around 0.36. Now it is at around 0.45. So these things, these individual models are signaling a heightened risk for Bitcoin accumulation and also the rest of the asset class. With that, I would like to conclude by saying again, these drops and the rallies in the bear market are similar from cycle to cycle. It wouldn't be too surprising if the price of Bitcoin, again like it did, find a resistance at this yellow line in 2022, finding a yellow resistance at the prior cycle support, finding a resistance over there, and then having a drop to this area somewhere close to 50-55k could always be on cards. Again, not financial advice, towards the middle of quarter 2 or start of quarter 3, towards summer of 2026. With that, hope you enjoyed the content. Hope you did. If you did, please give a like and subscribe and help the channel grow. Thank you and have a nice day. Bye bye.